Good morning, Dr. Suresh. My name is Nelson Kai, and this is the video regarding the question 2 of the corporate financial management assignment 2. Uh, I already did a write-up and sent it to our class team for assessment. As per the question 2, we would recognize the video, so this is the video. And for your confirmation, this is the my ID card. Yep. All right, without further ado, we'll be starting on with the 8 units which I've already covered. So our first unit, and it's the introduction on corporate financial management. Corporate financial management aims to maximize shareholders' wealth and to increase profit and all that, while ensuring the long-term sustainability and growth, and and to ensure that the investors and shareholders are, are to be rewarded with the benefits of what they have invested into the business. The key functions include capital budgeting, capital structure management, working capital management, and financial reporting. These are the key functions of corporate financial management that would they would report to the shareholders and investors. It also emphasizes one of the important area is the efficient resource allocation in financial planning and risk management and performance measurement are crucial purpose of corporate financial management. As I mentioned, the efficient resource allocation is one of the key area where all the resources are being planned accordingly and risk are being measured and managed, and also the crucial purpose of corporate financial management is determined by how these key areas are being looked at and implemented accordingly. Another point that we've been looked at in the uh, uh, introduction unit is the career opportunities. What are the career opportunities in corporate financial management? For example, in corporate financial management, the career opportunities that we've looked at is the role such as a financial analyst who analyze the data of financial information, and also we have a treasury manager who coordinate and look after the treasury and manage the finance and those that are involved in the treasury. And we have also have a controller who control and oversee the movement of the cash flow and review all the transaction and all that. And we also have the role of a chief financial control, which look after all the financial movement in and out of the organization and business. So these are the key career opportunities that we've looked at in corporate financial management. The other point that we uh, came up with is the maximization of the shareholders' wealth. Corporate financial management, the main aim is to maximize the uh, financial wealth for the shareholders and investors who took risk to invest into the business. So the main aim of the management is to maximize the shareholders' wealth and focus on sustainable growth and strategic investment decision that would be taken place after the uh, implementation of the maximization. Okay, that is all for Unit 1, and we're going to Unit 2. We had financial institutions, financial instruments, I guess. This is the categorized into equity security, debt security, and derivative and hybrid instruments. It emphasizes the areas such as financial market, which are classified into primary market, which is the new security, and secondary market, it is the existing security. Financial intermediaries or financial institutions like banks and investment firms facilitate transaction, issue loan, and by the way of providing the liquidity and reducing the cost. However, interest rates influence the economic activity. If there is a more interest rate, uh, it, it determines how the economic activity would take place, depend on the interest rate. So, uh, where it, therefore, we have an institution or a controller like central banks uses monetary policy tools to control the money supply and the interest rate so that the flow of the money can be stable and there's a control into the uh, cash flow and fluctuation of the interest rate. Moving on to Unit 3, we have financial statement analysis. Uh, Financial statement analysis, it involves interpreting and uh, have a few understanding on how those financial statements, such as income statement, balance sheet, and cash flow, are being interpreted and made informed decision for the future uh, runs of the business and making the informed decision as well. In financial statement analysis, we also looked at ratio analysis. In ratio analysis, it involves evaluations of companies' performance using the uh, methods such as liquidity, profitability ratios, and liquidity ratios, and also we have the efficiency ratios. But these ratios also have some limitations as well. Okay, we have another area important that we've looked at is the time value of money. Uh, the time value of money is the fundamental in DCF techniques where it determines the future value and the present value calculations which are very important or essential, vital for the investment valuation. Um, and the other area where we have looked at is annuities involved. Annuities involved is a regular payment over time. Uh, the future or a present value can be calculated using a specific formula. And another area that we have looked at under the time value of money is the non-annual compounding required adjustment, which to the interest rate and period for accurate future or a present future value calculations. These are the technical and calculated areas where were being discussed under the corporate financial management under the time value of money. Uh, it is it has been calculated that how uh, the money is worth currently and how much it could worth and into the future after a certain time is passed, and how can we calculate that one, and that has been discussed. And another key area is discussed under time value of money is the amortized loan. Amortized loan involves equal payment over time and decreasing interest portions. And amortization schedule details each payment. Amortization has a schedule that details each payment to be made or to be done accordingly to the schedule. Moving on to Unit 5 or 6, we looked at bond valuation involved in the same topic that we've discussed. Is the bond value valuation involves determining the fair value based on the present value of the future cash flow, including coupon payment and face value. Share valuation methods include the dividend discount model, practice to earning ratios, discount cash flow, and making comparable. Moving on to the next, the topic we discuss is about the relationship between risk and return. Risk and return uh, is a central to investment theory. Is a central to investment theory that has a high risk typically demand a higher expected return as well. The portfolio diversification reduce unsystematic risk but also systematic risk. CAPM helps estimate expected return based on the systematic risk. The final and the least topic that we discussed is working capital policy. Working capital policy is one of the interest unit we've discussed, which balance the profitability and risk through the conservative, aggressive, or a moderate approaches to manage the current asset and liabilities. The cash conversion cycle is another a key point area we've looked at is to measure the efficiency of the capital working capital and managed by evaluating inventory turnover, collections, and payables. Efficient cash management involves forecasting cash flow, monitoring position, and investing surplus cash wisely into the business while maintaining the bank relationship so that in the event we need more cash or funds, we would have a good relationship with the bank in order to get loan and get funds to sustain the business. We also looked at the marketable security, which is the final one. The market security should be liquid with manageable risk. Diversification optimize return while adhering to regulatory compliance, uh, where we can comply with the compliance so that we are safe and secure in terms of liquid and marketable risk. Understanding financial environment involves analyzing market structure, interest rate, tax, and the impact on economic conditions. And the final point that we've discussed is also valuation techniques for the financial assets, help investors assess potential risk and return for informed portfolio decision in order for the economic decision to be continued and sustain into the future. That would be all the values for the video for the assignment, and have a pleasant evening or day, and God bless. Thank you very much.